Yesterday, Danish company Konsolidator published a report for the third quarter of 2022, and joining me on link today I have its CEO, Claus Finderup Grove. How are you, Claus?
I'm fine, thank you.
It's very good to see you again. As I understand it, like last time, you have prepared a presentation for today, so I'll hand you over the word and then return to ask some questions.
Excellent. Thank you very much, and hello all you Swedish investors. My name is Claus and I'm a CEO, as said, and I'm sitting here in Copenhagen. Today, I'll give you a fairly short introduction to Konsolidator and to our Q3 results. Firstly, you know about Konsolidator, but we are a SaaS company making a financial consolidation system to CFO around in group in the world. And as you can see on this slide, then we have 252 customers as per September 30th in 20 different countries. As you will see later, we are biggest in Denmark and in Sweden. Just to give you a small market update, because things have happened since the last time I presented to you. And again, for those of you who do not know us that much, then we are focusing on these three areas: Denmark and Benelux, Sweden and Norway, and UK and Ireland. And in Denmark and Benelux, we are a Danish company and we were founded in Denmark, so Denmark is by far our largest market. And that is working as planned, and we have had a year-on-year growth of 32%. Because Denmark is a smaller market than other markets that we are in, then the Danish team is now also starting to concentrate on the Benelux, where we are focusing especially on Holland here in Q4. But the growth in Denmark was satisfying, even it was as 32%, and that is because the denominator in Denmark of our sale is higher than the other market. So 32% is actually satisfying for us. The same with Sweden. We are growing very fast in Sweden. You can say year-on-year growth at 8%. However, we have decided to close the Stockholm office because our sales rep in Stockholm, he resigned before the summer, and then we decided to close the office in Stockholm and then replace the team in Stockholm with two sales reps here in Copenhagen. So we will continue in Sweden as always, but we will do it from Copenhagen, where we have hired two sales reps, one covering Sweden and another one covering Norway, which we could actually get for the same cost as having the office in Stockholm. UK and Ireland has been a bit of a disappointing. We have not grown as we have expected. You can see it's only 25%, and the 25% is not representing the same absolute amount as the Danish 32%, because the total AR we have in England is much lower than in Denmark. Same as in Sweden, we have decided to close the office in London and replace the country manager of England and Ireland with a sales rep in Denmark. So the country manager for England, she will stop end of this month, and then we have now started the phase to find a replacement sitting in Copenhagen. So both reducing the cost in Sweden and Norway, but having the same sales effort is of course also a way to get into profitability faster than first estimated. The same way, we have also reduced the cost on our development team, where we have in mutual agreement agreed to stop the cooperation with our CTO, who will stop at the end of January at the latest. A little bit on the Q3's performance on the financial. We had a revenue in Q3 of 4.5 million Danish kroner, which is 33% higher than the same quarter last year. So again, that is satisfying, and we are happy with that result. As you know, Q3 is always a difficult quarter because of summer holidays, which is more or less half of the quarter. Our year-to-date revenue was at 12.2, which was 41% higher than the same period last year, which is also within our expectation. The EBIT ended at a negative of 17.1 million, which is a small improvement of 800,000 Danish kroner compared to the same period last year, which is an improvement of around 4%. Then a little bit about the outlook, because when we announced our Q3 result yesterday, we also came with a adjustment of our future growth. Before yesterday, we had an expectation of a growth of around 40 to 60%, both this year and also the next 3 years. But because of the turmoil we have seen out in the world, and because of a slower sales cycle, we unfortunately have to reduce our growth estimates both for this year and also for the next 2 years. But as you can also see, we have been able to reduce the cost fairly fast. So we actually approximately will be at the same EBIT as before the adjustment of the revenue. So in line with the lower expectation to income, we have also reduced the expectation to the cost. So as you can compare the previous outlook with the new and adjusted the outlook, the EBIT is more or less the same. We are still a growth company, and we still believe that 20 to 30% growth is high, especially also again as when in line with the denominator is growing. It will be of course more difficult to maintain the same growth. So we're actually fairly proud that now we can still continue with 20 to 30% growth, and now look into an scenario where we will get to profitability within 1.5 years. That's our expectation. The last thing I want to touch upon before we go to the Q&A, that is our capital structure. We also announced yesterday that we have a requirement of 5 to 10 million Danish kroner in equity capital to run the current organization and to maintain the estimated growth. Besides that, then we have a loan of 25 million Danish kroner, which is a convertible loan that has to be repaid paid back before September 1st next year. So that means that we in total has a requirement of 30 to 35 million Danish kroner within the next 12 months. And what we are planning and what we are trying to accomplish, that is to raise 15 million in equity capital, and then get a new loan of 15 to 20 million. But that loan should be an annuity loan, because after 2023, then we will actually be able to pay back the loan, so we can repay the loan within our working capital. So right now we are in dialogue with different investors to raise these 30 to 35 million through these two different ways, equity and loan. And when we have that in place, then we actually have enough capital to be profitable and have a cash flow, have enough cash flow to run the operation. So this is what we will be working for before the end of this year. And that was my presentation. Thank you. So then I will hand the microphone back to you.
Thank you very much, Claus. It was lovely to listen to. And I'll head to the questions now. As you put it, the revenue for the quarter amounted to 4.4 million crowns. A 30-ish% growth from last year's third quarter, but a slight increase quarter to quarter. If we look to the software as a service metric ARR, also known as annual recurring revenue, it also increased by 1 million, landing at 16.6 million next to exited the quarter. I'm curious to know what drove ARR this quarter.
It's actually mainly Sweden. I mean, Sweden is very, very positive. Sweden was disappointing in the first quarter, but in Q2 and Q3, Sweden has performed very, very well. The Swedish CFOs, they like our product, and we have a very strong pipeline in Sweden. So Sweden was the main reason. And then after that, then it was Denmark. We have a fairly high brand recognition in Denmark. The auditors know us and likes us. So Denmark continues also to support the growth, but I would say mainly Sweden.
6 new customers in Sweden, I could read. But is there any common denominator that characterizes these new customers?
Yes, I would say so. In general, what we are looking after, where Konsolidator is very strong, that is a company that has 1 or 2 foreign subsidiaries and has a growth path, and then also have a revenue in around 300 million Danish kroner, plus minus. In that specific segment, we are very strong. And then we also see in Sweden and in Denmark a tendency that smaller groups also tend to look for standardized software doing financial consolidation. And down in the lower segment, there are not that many competitors, because our competitors in the financial consolidation space are mainly software that are meant for larger groups. So down in the segment, for example, customers using the smaller ERP system tend to like our software. So we have a lot of Fort Knox users using Konsolidator.
We'll keep our focus towards your customers, because you noticed 2 things during the quarter. First is upsales to existing customers, but also a high churn rate of 9.7. I thought you could talk about the customers that you have upselled to, as well as the customers you've lost during the quarter.
Yeah, that's a very good question, because as you can see, our net retention is 102, up with 2%, but that number is comprised with both 12% upsale and 10% or 9.7% churn. So both numbers are high. Starting with the upsale, we are very, I would not say positive surprise, but we are very enthusiastic about our upsale. We started focusing on upsale actually a year ago. So it's something fairly new to us to go out and see whether we can sell more to existing customers. So what we have done so far is, firstly, and that's a big part of it, that's a price increase. We have never increased our prices until last December. That was the first time in 6 years we raised the prices. So there was a part of that. Then there was also that we introduced what we call evening support. So customers can now call in after 4 o'clock and get support. And that we also charge a low fee for. I think it's 30 euro per month or something like that. It's a fairly low fee, so we've also been successful with that. So that's the 2 main components. But we're also starting to sell new product in SaaS and in cloud software. You see a tendency that you get more and more niche products, which are very strong to integrate with other strong niche products. And we have actually partnered up with a strong Swedish software called Leasify that are doing something called IFRS 16 software, which resonate very well to our customers. So that we have also been able to sell to our customers. And a couple of weeks ago, we had just announced a partnership with a budget and planning tool, which we are now starting to sell to existing customers. We haven't sold anything yet, so nothing of the budget and planning in the current numbers, but we expect to see also an upsell potential on the budget and planning tool. So we are both starting now to be, you can say, a little bit harder on the price increasing. So now we will increase the prices every year with 2%, which we have in our subscription terms. So there you will see a 2% increase on existing customers going forward. And then we will also be selling add-on product to existing customers. So that was the upsell part.
I'm curious about the churn rate still. As you mentioned, price increases. Is price increases a potential reason for customers to cancel your service?
No, not really. And if you're moving a little bit into churn, it's correct that the churn at 9.7 is unsatisfactory high, and also the highest we've actually seen ever. The main reason for, the main reason for the churn, that is churn during onboarding. We have had a huge growth in both in the last half year of 2021, and also and many of those customers have for one reason or another not been satisfied with the onboarding process. So we had I think 70% of the churn is within onboarding. So first, when customers are fully established, then we see a very, very low churn, 2 to 3% churn. So no, so it's not a churn because of price increases. I think more or less all customers expect price increases once in a while for any product. So it has not been a big churn or pushback on the price increases. It is mainly during onboarding where there is a risk. And because it's narrowed down to onboarding, then it's of course also have extremely high priority for us to solve the onboarding process, making the onboarding much easier, faster, and maybe also more intuitive. So we can live up to the expectation that the new customers that they have.
We'll move from churn now and into your markets, because I was curious when it's stated the following in the report: dedicated sales resources are being put to a new market, Norway. Could you tell us about the outlook for your services in specifically Norway?
Yeah. Firstly, as I also said previously, we have been disappointed about the growth in England, and of course we have tried to investigate that a lot. And one thing that we see is that our product resonates very well with very cloud mature markets. Not that England is not cloud mature, but there is still some, you can say, old-fashioned thinking in some part of England, and that's one of the reasons why we have a slower growth than what we expected. But we can see both in Norway and also in Holland, Benelux, that they are very cloud mature. So when we have the chance to close the office in Stockholm and save some cost there, we could see that we could actually, for the same cost, have 2 sales reps. And that's the reason why we hired a sales rep for Sweden, because that's a very strong market. But then also looking into Norway, as Norway is also cloud mature, and some of our Scandinavian auditors saying that the Norwegian market could be very interesting for Konsolidator. So what we've done is that we have hired this sales rep for Norway. It's actually a Swede, and then she will investigate Norway. And if we have actually the same expectation to Norway as we have in Denmark and in Sweden, so we believe that we can grow fast in Norway. But if it for some way or the other shouldn't turn out that way, then we can convert this sales rep into focusing on Sweden together with our other sales rep for Norway. So for us, it's kind of a way to look to a new interesting market at a low risk and also at a fairly low cost.
We'll, of course, also have to talk about financing that you talked a little bit about in the report. To turn the negative equity to positive and to pay off the convertible loan, you're seeking financing of 30 to 35 million Danish crowns. Will that be enough?
Yeah, that is enough. Now we have, you can say, reduced our cost to a level. So if we can get these 5 to 10 million, then we have enough to run the operation towards profitability and also to enough cash. So yes, that is enough. That is actually the reason why we in our headline in our our quarter report say that we are prepared for troubled water. We believe that we have a possibility to grow higher than the estimated 20 to 30%, but we are prepared to grow with only that and have the cost and organization in place to grow at least 20 to 30%. And then to have that, then we have required this 5 to 10 million in equity, and then that is sufficient.
But what of securing this financing? Are you optimistic to undertake the challenge?
Yes, we are actually more optimistic now than we have been for a long time, and the reason for that is exactly 2 reasons. One reason is that we are seen as an interesting growth company from many investors, and now we have been listed for 3 years, and so we've had a lot of dialogue with a lot of investors that have followed us for many years. But some investors have thought we were too expensive earlier, but now our market cap to ARR is down to below 10. So now many investors find us attractive to invest in. So yes, there is a high interest, and we believe that we actually ourselves believe that the price for Konsolidator is low. is at least historical low at a multiple below 10. So yes, we are fairly optimistic on the equity part. Also on the loan part, we can see that if we are getting the loan to 15 to 20%, then there is a good balance between our debt and our market cap. And as we are then moving into a cash flow positive scenario, then we are also able to repay our loan within our working capital, which also make it more interesting for a loan provider to talk more serious with a company like ours. So yes, we are optimistic both on the equity and on the loan side.
Claus Finderup Grove, CEO of Konsolidator. Thank you very much for your time and wish both you and Konsolidator good luck.
Thank you very much. Thank you.